We really see, today as being sort of the starting point for Cornerstone Angels. We officially had our launch in December of '06, so just last month during the holiday. We are taking both our members or folks who want to move over from our prior group into this new group. But I'll say, every other month we have our investment meeting, and we typically have anywhere between 35 to 60 people who attend our meeting. We would typically, at a minimum, have 10 investors in a room, and on average, it's between 10 to 30 investors. We believe through our new effort of really focusing on Cornerstone Angels, and we made a big splash in our announcement of it. We're hoping to have anywhere between 25 to 100 members of our group by the end of this year, and we're hoping that we'll consistently have between 50 to 75 attendees at each of our investment meetings. So, based on the focus, our target focus for companies on Cornerstone will be companies that are typically raising between $500,000 and $2 million in their raise. As a group, depending upon whether it's a smaller raise, we could potentially take an entire round of which they're raising. If they're raising some larger amounts, we're more likely going to be a piece of a larger round. And as we said, we're very open to investing with other folks outside of our group, whether it be individuals, angels, venture capital firms. And we believe, at least in the initial stage, our average investments will be anywhere between $100,000 and $500,000. Going forward, our vision is not only to invest on a deal-by-deal basis and to have individuals invest directly into a company, but our goal and our vision is to be able to have or create a committed pool of capital, in essence almost like a sidecar fund of which we have our members invest into a pooled vehicle of which it's sort of an ability to invest alongside a number of different companies, and so it gives them a diversified approach. And in that case, we may have the opportunity to invest directly through that pool of money, as well as members investing alongside of that. And so our average is, down towards maybe the end of 2007, may increase above and beyond that. When we look at companies, the things that clearly take companies out of the running to possibly present to our group are, number one, is a poor market opportunity with a poor product and or service of which we truly believe it doesn't meet the needs or wants of that community. That's number one. Number two is what we see as a valuation issue where the entrepreneur believes that their company is valued way more than what our membership would be comfortable with. As a group, we're most comfortable with companies that have valuations less than $5 million as a pre-money valuation. That's not to say that we won't look at companies that have greater valuations, but it just increases the hurdles with respect to their product or service development status, their revenue, their management. And again, management, I mentioned management, of course, is key. We like to see at least a skeleton form of the management team with a number of folks in place with clear and delineated plans about who the next hires would be and to show that sort of demonstrable progress to get there. Also, we like to show strong domain knowledge within any area that the company is going after, and for folks to be able to clearly delineate for us what are the sales and marketing channels that they'll go at and what is the typical cost of acquisition of any customer.
A little different.
Yeah, as you come into this, each person as an individual member is their individual person with their own different type of net worth and portfolio, and they're trying to decide about how much of an allocation will go towards this venture capital investing, which is a high-risk category. So we can't, truly define what it is in terms of their individual ROIs are, but as a group, we're similar to a venture firms. We want big opportunities. Our goal typically is we want an opportunity that hopefully will return 10 times our money. That being said, there's a law of averages which says that a lot of those opportunities will not be anywhere close to that 10 times. We'll have a number which will fail, and that's part of the risk. Number one, we'll just go steady Eddie and may eke out maybe half our money or 1 times our money, but we're hoping there'll be a couple doubles and triples, and hopefully one that'll at least be 10 times, 20, 50 times. But I would say on average, we're looking, as we're screening all these companies and going through this process, we're trying to look for the vast majority which can have 10 times returns. At the same time, which I found is a few opportunities have had not so big returns. They may have a 2, 3, 4 times return, but they have opportunities which they're cash flow generating machines, and they offer a dividend opportunity. And there's a subset of our membership which are interested in those. One other thing I'd mention is that as a group, we're mostly focused or predominantly focused on early stage opportunities, and that's where most of our focus is. But I also realize that certain people don't want to go through a lot of that diligence process with early stage companies with that risk factor. And so there's a current activity which I'm working on, which is still in its early stages. I'm hoping over the next few months it'll be cemented. But we will also have the opportunity for Cornerstone members to be able to invest in Tier 1 late-stage venture capital opportunities. So as an example, you've always heard of people like Kleiner Perkins and Excel and Summit and Sequoia and Warburg Pincus. We will have the opportunity to present to our membership opportunities which received investment from all these folks, and which will be sort of the last round before most of these companies will probably be filing to go public. And we'll be providing a vehicle for some people who want to play in late-stage opportunities also to invest in these opportunities in sort of a pooled investment vehicle.